to another episode of With SONAR. I'm your host, Falasca, of course, joined by Tony Mulvey, and we've got a fantastic lineup for us today. A lot of interesting things happening in the freight world. Also, first, that new intro with SONAR, that was great. Whoever did that new animation, love that. But Tony, there's a lot of exciting things happening. We're kind of in an interesting place here. We are officially we're into the back half of Q3. First off, a lot of things have been happening and kind of teeing up to something we're going to talk about later, which is contract rates. So we'll get to that in a minute. But Tony, there's been a big shakeup in the freight world in the last little bit with some acquisitions happening, right?
Yeah,
what's going on there?
You see Heartland Express going out and purchasing CFI. I mean, it was a massive. I mean, it's a massive acquisition when you think about in the truckload space, particularly. You've seen big acquisitions. I mean, you think Knight Swift buying AAA Cooper. You see, I mean, that's a truckload carrier buying an LTL carrier. You saw TFI, who owned CFI, went out and bought UPS Freight, also an LTL carrier. That's where you're seeing a lot of this acquisitions happening and getting away from the commoditized freight trucking space. Yeah. This is kind of a reversal of that. It's Heartland Express purchasing CFI for $525 million, really growing in this truckload space. They become the 8th largest truckload carrier, the 3rd largest irregular route. So non-dedicated, if you want to think of it that way, is probably the better way to think of it, because it's not just spot market. They have contracted freight with a lot of customers, but it's not, hey, you're only going to be running lane A to B for this customer. So it's definitely interesting. I mean, it's a massive deal, and if they can, I mean, Heartland Express has this kind of history where they don't do things that don't make them money in the long run. So it's interesting to think about.
It's usually a good thing to do in business.
Yeah, exactly. And
call me crazy. Not trying to split hairs or anything with the audience.
No, and they're trying to get to that 85 OR within 3 years, and I mean that'd be
a strong OR.
And I mean that's what they're kind of known for in the truckload space, is having that strong OR. So we'll see how it plays out. But I mean overall, the acquisition on the surface looks like a good one, especially when you think about where CFI ran. I mean that NAFTA, as Craig alluded to on FreightWaves Now, that I-35 corridor north-south was dominated by Celadon and CFI. Well, we know what happened to Celadon in 2019. Now you're seeing CFI be acquired. It kind of gives Heartland some of that. I mean, you look at their acquisitions that they've made. They've made acquisitions in the Northwest and in the Northeast. Well, this gives them a North-South connector between all the way from Mexico up to the Canadian border.
I'm trying to think, if I had $525 million, where would I throw up for best possible returns right now? I might just go ahead and buy Bed Bath & Beyond.
You going to buy Bitcoin with $525 million?
I might. It's gone down a lot, right? You know, buy when there's blood in the streets.
True.
Right? That's what they say. But $525 million, you can do a lot with that. Yeah. You can do a lot with that. It'd be interesting to see. And it's an interesting time to buy, too, because the freight market has really been so soft for much of this year. Yeah. Right? There's been different aspects of the freight market that have done well, absolutely. But for a lot of this year, the freight market has just experienced softening. Now, have we hit the bottom yet? Hard to know. We'll probably figure that out in 6 months to a year if we have or haven't. Yeah. But it is interesting. You could argue it's a very strategic time to start looking at transportation companies. And I think maybe we'll see some more acquisitions there.
Yeah, I mean that was kind of the how much of this is going to be a acquire because you want to, or you're selling an asset that you just don't necessarily want. And I mean, you look at what the deal is, where it got purchased, right? CFI was under Conway, who got purchased by XPO, and then it got bought by TFI, and now you see it at $525 million. I think that's actually under the acquisition price that TFI paid, but it's kind of getting out of it's more of a strategic kind of exit, get rid of it, and you're not really taking a huge loss on it if that's the case in that value. I don't want to say. I mean, it's just a little value loss. It's not that big of a difference. But, I mean, when you start to think about the acquisition, it ultimately kind of makes sense. We talked about the USA Truck one earlier this year being purchased by DB Schenker. That was a way for DB Schenker to grow their footprint here in the U.S. And now you get this one that it's they're growing here in the U.S., and it's a way to, ultimately buy assets, buy drivers, which are arguably one of your more important assets. That's what, or if not the most important, they're the ones that make the truck go. So it's a way to continue to grow without having to spend on recruiting and things like that. Guess what? They're putting money to work. So, ultimately, that's what you want to see from a company that, they announced an acquisition there of Smith Transport, that Northeast carrier, earlier this year, but that was their first acquisition in 3 years. So, they've kind of been sitting on the sideline throughout 2020, 2021. Now they're making moves where they find that value.
Yeah, absolutely. It'll be interesting to see what happens too, and what additional acquisitions and mergers maybe happen. As we finish this year out, and even going into the beginning of 2023. Something that I think will really be interesting to see how that dynamic plays out is we've been looking at spot rates for a while now. And spot rates, we know there's no surprise here. They've been far below contract rates for months now. Nothing new about that, right? Pretty much since the middle of February, spot rates fell below contract rates, and they've continued to push lower and lower. In fact, with fuel now coming down, we're starting to see them push even lower. What's interesting, though, is we're finally beginning to see contract rates come down. We knew they were going to come down, right? All the signs were pointing towards them coming down. You have lower tender rejections. You have lower overall tender volume. You have lower spot rates, right? You have less imports being booked, right? Inventory levels are at an all-time high. All of these factors, it was just a matter of when did the shippers finally get all of these new bids out and they go live? Now we're starting to see the answer to all that.
Yeah, it took a little longer. I think a lot of this was wait and see, but you are seeing it. I think 8% from the high, down 8%.
Right. In 2 weeks, we've dropped almost 15 cents a mile.
Yeah, it's crazy.
And that's line haul, by the way. That's not even accounting for the fuel surcharges that have come down. That's line haul, 15 cents a mile drop in 2 weeks.
Yeah, it's a big difference. And you have to think about it, right? That's on a 2-week lag as well. So, this is through the beginning of August. So, what you've seen, there was like a 2 week, like you said, 2 week span where we came down 15 cents or 14 cents. It was like 1 cent per day.
Yeah.
But it's a big drop in the contract rate.
That's a very big drop in contract rates.
Go look at the increase, and you really didn't see that increase ever happen. It was this steady incline. Right. And this is just it. I think Michael last week in the Daily Watch said it best. They're falling without a parachute. it looks like they're straight down.
Yeah.
So it's definitely an interesting time when you think about how the bid cycles worked. And we talked with Emerge about this. How big does that gap between contract and spot have to be? It's where it needs to be to see contract rates come down. It's just a matter of time. And now we're seeing that matter of time.
Now we're seeing it. Let's go ahead and pull up this chart here for everybody to see, just so you can see the impact of what we're talking about here. So this might be a chart that's familiar with you a little bit already. So for reference, the blue line there is the contract line haul rates, okay, sitting at, I believe that's $2.76 a mile. And that, remember, that's line haul, in this case for van. The green line there is line haul spot rates. So again, we pulled out fuel so we can compare apples to apples. Sitting at under $2 a mile, again, line haul. So again, we've pretty much seen, spot rates have maybe ticked lower a little bit recently, but for the most part, they pretty much once they got around that $2 a mile line haul range, they've just kind of been hanging out. Again, a little down tick, but for the most part, no major moves since really their major dip from February to March. Contract rates, though, you're seeing that. You're seeing that dip happen, and it's coming down with a fury.
Yeah, and you have seen spot rates trend lower. That's kind of expected. August is traditionally not that strong of a month. You really don't ever see the upward pressure in the market. July's kind of the same way, right? It's everything coming off that summer, what you would think would be your summer shipping season, that in between summer shipping, so your late Q2, early Q3, before your fourth quarter, right? And it's just kind of this lull period. I don't want to say boring, but it's the typical normal season, right? Where you don't have these booms and busts. So to see that spot rate decline, it's not really a surprise to me when we start talking about the other market dynamics that are going on.
Yeah, no, spot on. Yeah, I think that it'll definitely be interesting to see where all of this trends, right? Because ultimately, none of us know where the bottom is.
Yeah.
Right, and I think that's a question we're asking. Eventually, we'll see it. We'll see it in spot rates before and tender rejections long before we see it in contract rates. Contract rates will still continue to see some of that downward pressure before, even after spot rates and tender rejections hit their bottom, because obviously they are lagging quite a bit. But let's go ahead and throw up the kind of the transition a little bit here. So we understand that rates are coming down. What I want to talk about though is this is just the line haul. We've seen fuel come down a little bit, right? You've probably seen that, right? You're going to the gas station, it's a little bit cheaper. If you're driving a truck, diesel now is right around $5 a mile, right? I filled up actually at $3.15 the other day.
I got you beat 302.
302?
Yeah, that was last week too.
Where at?
Buc-ee's in Calhoun.
That'll do it.
Yeah.
That's the key, folks. Go to Buc-ee's. If you don't know what Buc-ee's is, then you're probably not where we are from. Is Buc-ee's, that's regional, or is that, are they?
Yeah, I mean, it's big in Texas.
Big in
that's
Texas?
really where
because I had never heard of Buc-ee's till they opened one in Calhoun, Georgia, which is a little bit south of Chattanooga, in case anybody's curious.
Yeah, it's really big in Texas.
Okay,
that's,
really big in Texas.
Yeah, I will say, no, they don't allow commercial, no like semis or tractor trailers.
So it's essentially,
they do have diesel, but it's not, it's like a truck stop for the normal, regular consumer, I guess.
Right, so like the three like Volkswagens that show up that take diesel.
Yeah, that or campers. Things like
Some
that.
trucks,
So,
yeah. No, that makes sense. Got it. Okay, so basically there's no semis that are allowed there, but otherwise, I mean, because I've driven past it before, and it is ginormous.
Yeah.
It's absolutely ginormous. I've never actually gone to it, but I've driven past it before.
It's awesome. Highly recommend.
Highly recommend it. Okay, so maybe that's what I'm doing here on my weekend. I'm just going to go to Buc-ee's. But, so gas is coming down. Now, when gas comes down, right, because you've got spot rates, which are typically just priced as all in, and then you have contract rates, which are typically priced line haul plus fuel surcharge. So when fuel prices go down, what does that actually mean from the carrier's perspective in terms of like the money that I get?
It kind of depends. I mean, it depends if you're spot or contract, right? Where you said spot, you have that all-in rate, right? So this is one of those operating expenses that's coming out, that's coming down. Fuel surcharge, right? It's based on a couple different things. I mean, depends on what you're buying your fuel for, right? So we'll bring up the chart, right? The truck stop,
there it is.
The truck stop, diesel truck stop actual price per gallon in the blue line. And then you've got the green line, that rack or wholesale price. So you can see that spread, and that's where you're making money on the fuel surcharge, right? If you're buying fuel at $3.88, but your fuel surcharge is at the retail price at just over $5, you're making money on that spread. So it's one of those where how are you buying fuel is one of the keys, and then what you're operating in, that spot versus contract. But I mean, I think what's interesting here is you've really seen the diesel price at the truck stop really flatten out, and you've seen rack prices start to increase again. So it's really narrowing that spread that carriers were making, if they were in contracts, were making pretty good money on fuel surcharges back there in especially early July, but really all through from, say, early April onward. Well, guess what? I mean, that's getting narrower when you see this rack price. With rack price, you have to remember, people the truck stops set their price kind of based on that rack price, but I mean, they're the ones setting the price, right? So they see that start to tick up, and if it sustains itself, you may see diesel prices start to rise again. Spot on.
And that's interesting to see too, because now from a shipper's perspective, you're like those shippers that are negotiating those lower contract rates, they almost get the double dip. They get to see some of those lower contract line haul rates, and they're having to pay a little bit less on the fuel surcharge as well. So that's a double dip from their perspective. If I'm Target or whoever I am, and I ship a ton of contract freight, this is good news for me.
Yeah, where would you spend an extra $1 billion in freight spend that you didn't think you were going to have, and now you're getting the benefit on the other side of the come down, right?
I thought I was going to spend $1 billion, now I'm going to spend $900 million.
Yeah, and guess what? You do get rewarded when you cut your operating expenses. It's crazy how that works, but if you can slow down those operating expenses and grow revenues, guess what? Shareholders like that.
Yes, they do. It's amazing how that happens, and they reward you for such positive impacts on the business, right? Speaking of which, if I could save $100 million, could I We need to get. How do we get a chunk of that? Like, if you were like the transportation or director of supply chain, transportation or logistics for like Target or something, you managed to cut down expenses by $100 million. You think they get like a % of that?
I have no idea. Not in my.
Talk about winning the lottery.
Yeah, it's not a bad one to win.
Even like 1%, that's a nice little bonus. Anyways, so we've seen fuel come down, and we're seeing the line haul rates on contract come down. So, all of that is pointing towards a lot of downward pressure on prices. Who knows? Maybe we'll see some of that come back towards the consumer, but time will tell. Now the question is, okay, well, what does this mean, from a tender perspective? Supply and demand are ultimately kind of the leading indicators. So we haven't looked at tender rejections and tender volume together recently, so I thought this would be nice, kind of bringing us back old school a little bit. Blue line is tender volume. And look at that, pretty much since early June, that big little uptick you see there towards the bottom right, it's just been downward pressure.
Yeah, I mean, that
volumes, less tenders going out.
Yeah, I mean, that uptick is Memorial Day.
Right.
I mean, and then it's down from there. I mean, you saw a little uptick right at 4th of July.
Yeah.
But
tiny though, not
look
much.
at post 4th of July. I think that's what's telling. I mean, if you think June is typically pretty strong, it came right off that peak and kind of flatlined all the way through. And then guess what? Down from there. So, I mean, obviously less freight. I mean, you hear it. I mean, and you're seeing that now, but you're also hearing these retailers. I mean, you mentioned one, but all of them are mentioning canceling orders. And guess what? That's not happening now. That's not affecting freight volumes now.
It's not.
That's upstream, right? Yeah. So that's what's coming. You're canceling orders. So, I mean, if their outlook was something, I've been moving X number of loads, well, guess what? Right. That may go away pretty quick when the actual cancellations of those orders start to flow through into the domestic supply chain, or the ripple effects that you would see, the bullwhip effect of.
I don't see a peak season.
Well,
at least not one that we are traditionally used to.
Yeah, I mean, it's going to be probably more muted. I mean, if you look kind of on the ocean, right? I mean, yes, there's congestion, which is keeping. It's keeping some of those customs imports a little higher than maybe what we would have expected. But you start looking upstream, right? That the bookings and the volumes leaving other countries that are headed here, they're still declining. So, I mean, that's what you would think this is the peak season for the ocean, and you're just not seeing it come to fruition yet. And I think that's the concerning part for peak season here domestically.
Yeah, I mean, it's a slow-moving process, right? Yep. It's a very slow-moving process, especially now. Yes, we're still bringing a ton of goods through, the ports, but part of the challenge is that we're already backed up, right? Right now they're just backed up due to just their ability to push stuff through. There's still been stuff waiting for so long.
Yeah.
And there's also not a lot of places to put it. A lot of times they have to wait because they're waiting for inventory space to free up.
Yeah, I think that's half the battle. I mean, these ships are off the coast are effectively acting like floating warehouses as opposed to, hey, we need to get that in. And me and Donnie have talked about this a lot. It's the goods now less time sensitive. You're just not having to push things through as fast. Whereas during the pandemic, they had to push it through instantly, right? I mean, so it's just kind of this shift. You're seeing this shift in the consumer. I mean, we've talked about it a bunch, but they're spending more on gas, more on groceries, more on things like that, more on services, right? Things that aren't these tangible goods or necessities, right? They're not spending on the discretionary items. I mean, again, if you go look at some of these retailers, go look at those discretionary items. I think TVs, appliances, things like that, they're all on sale.
They are. So. Yeah, I mean, because they have to move inventory. Walmart talks about that too, which is like, they've discounted a lot of goods. Target did as well as some others. And it moved the needle a little bit with inventory, but not as much as they were hoping. Yeah,
I mean, I think Walmart's interesting one was that one of their comments out of their earnings call or earnings release was that you're seeing that next tier of consumer up, right? That middle to high income starting to kind of pinch pennies. I've talked to people I know that, hey, we used to shop here at somewhere, their prices are too high. We're moving to Walmart because it's a reasonable price. I mean, that's kind of the shift that you're seeing. And it has it's not an instant impact. And I think that's the key is like, what we're talking about is things that are going to change over the next 6 months, 9 months, things like that. These trends that have started, but to come to fruition to where it's like, oh, hey, this is really happening. It takes a while for that to actually show up in anything. So I think that's the key, is like, we're seeing it happen. It's just, and they're telling us it's happening. It's just, it hasn't shown up yet.
Yeah, and it's only a matter of time. I want to go ahead too, though, because I think we've talked about a lot of, negative sentiment, right? Everything's going down, but the nice thing about this, there's always opportunities.
Yep, absolutely.
Even in a down market, there's always opportunities. So I want to go ahead and throw up this map. A few of you guys who are familiar with the show may be familiar with this. We haven't showed it in a while, but this is one of my favorite maps, honestly. It's the weekly tender rejection map, and what it does is it's going to tell you the 7-day change in tender rejections from where we were this time last week, and I love it because it's just about showing you where the near-term momentum is, either to the upside or the downside. That's it. It's not trying to tell you or give you a crystal ball as to what's going to happen a year from now, but it's that short-term momentum. In short, the blue markets that you see there, those blue colored areas on the map, are where tender rejections are increasing. I mean, look at South Florida there. They're seeing some upward pressure. Way up there in Michigan, right? Seeing some upward pressure in Midwest, a couple other areas. Right, those are good signs, that means that capacity is getting tighter. It doesn't mean that it's super tight, but directionally, it's moving up. Those red areas are experiencing the opposite effect, right? Further downward pressure, further softening. And then the light or white colored areas, or tan, unchanged from about a week ago. So you can expect, not a lot of change. So again, it's a nice signal. If I'm a carrier, of where to maybe position trucks, where to stay away from, or if I'm a shipper, again, I got DCs in some of these areas, again, where to maybe be a little proactive, make sure we have that capacity, and where then maybe we can apply further downward pressure.
Yeah, I mean, it gives you an opportunity to understand where, not necessarily to price freight, but it gives you an idea of which way the market's headed to price it, right?
Yes.
If I have a spot market load in Fort Worth, right, I know it's coming, and I see this, it's, hey, maybe I can push it out now before rates react to that tightening.
Yes.
But on the flip side, hey, maybe I can wait a couple days. That's not so time sensitive in some of these red markets. I mean, look at a Fresno, right, out on the West Coast. Hey, I can wait. Maybe I can wait an extra day and see if rates start to drop. So it gives you an idea, like you said, directionally of what the market's doing, and then you could price accordingly. You can make decisions on, hey, I need to tender this now, or I can wait a day.
Exactly right. Exactly right. It's all about positioning yourself. On the flip side, though, we've got coming up soon. I'm very excited for our next conference, F3. That's not far away.
No, I mean, November 1st through the 3rd. I mean, what is that? Just
3 months? Not even.
Yeah, not even. I mean, September 1st is next week. So, I mean,
who's coming to F3? It's going to be a great time. You get to hang out with Luke and Tony. We're going to be doing the show on F3.
We are.
That's right.
It's going to be. I've seen some of the speakers, some of the lineups. I mean, it's going to be awesome.
Going to be awesome. And it's going to be huge, too. Like, if you went to some of our last, like the last one we were in Northwest Arkansas, right? It was a good event, right? But it was a lot smaller. Everything was a lot tightly packed. This one's, obviously, there's going to be a lot more people here. But also, it's going to be spread out along the city. So we'll have the convention center, but then there'll be activities. And I think that's what's going to be exciting is people want to network more, right? They love seeing some of the good keynotes and the technology, but they want to be able to network more. So there's going to be activities at this golf course or at this pub or wherever.
Yeah, I mean, I think there's a networking event at the aquarium. I mean, how awesome is that?
It's awesome.
I mean,
by the way, we have a great aquarium, Tennessee Aquarium. Little pat on the back, go Chattanooga.
Yeah, but then you're also Station Street, and I mean, there's just going to be stuff all around the city.
I don't think any people here watching this know what Station Street is.
It's one of the best areas in town.
Great area.
I will attest to that. I've spent a lot of time there.
So you got folks coming into town, right, who aren't familiar with Chattanooga. What is something that you think is pretty Chattanoogan that somebody should do?
That's a tough one.
Mike's getting some feedback from the year here, and we're saying Mike's Hole in the Wall. So if you need to grab a drink with some friends or a prospect, maybe you should check out Mike's Hole in the Wall. I don't know if that's a serious recommendation or not, but nonetheless, I've actually never been to Mike's Hole in the Wall, so I can't really speak.
I was there yesterday afternoon.
You were there yesterday? So. Well, then there you go. If you want to go to have a drink with Tony, go to Mike's Hole in the Wall. Have a great time. Maybe we'll do with SONAR at Mike's Hole in the Wall.
I don't know. The walking bridge is pretty cool. I mean, it gets a lot of overhype, but I mean, it is pretty cool.
I'm a big fan of the Art District over by the Art Museum, but like specifically, like you got Rembrandt's and some of those other restaurants. They got great, like if you like to just kind of, if you don't want to go somewhere and have a full meal, you get to go there, have some dessert, some tea, walk around, see some great views of the river. You'll have a great time.
Absolutely.
If you need to unplug for 30 minutes, go to the Art District.
Absolutely.
Anyways, we're at the end of time here. We hope you enjoy the show. We'll see you next Wednesday live, 3:30 p.m. Eastern time. In the meantime, have a fantastic rest of your day. And let us know what you're seeing in the market. If you have questions about Sonar, let us know. You can always reach out to me on LinkedIn or Tony, but let us know what you're seeing in the market, how we can help. Have a fantastic rest of your Wednesday.